I'm Larry Ray, President and CEO of American Manganese Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Ted Dixon. He's the CEO and co-founder of InkResearch.ca, Canada's first online financial news and research service, providing insider news and knowledge to investors. Welcome back to the show, Ted.
It's great to be back, Jim.
How is the Canadian gold market doing? I know we had a big correction. Is it going to be okay?
Well, we've done some work on the gold market looking at what insiders are doing, and we've actually published a report this month. We publish it every month, but this month, for October, we've actually made it free on CanadianInsider.com for registered users. It's our October 20 gold stock report, and you can get it right on the homepage at CanadianInsider.com. And the title of the report basically is looking at, have the Doves won the war with the Hawks with respect to monetary policy in the U.S. And our conclusion is basically it appears they have. Now, what's been interesting, Jim, is that on August 2nd, the iShares Gold ETF, which looks at all the big producers, has Barrick in it, Kinross, and the like, it peaked out, and at the same time, our gold indicator for insiders bottomed at 50%. 50% means there's twice as many stocks with selling as there are with buying. Now, fast forward to this week, what do we got? We've got a 25% correction in that ETF, but we also have our gold indicators doubled. It's over 100%. So insiders have been buying the dip, and so that suggests to us that values reemerged. And the other very important development over this correction has been that the junior stocks have outperformed the senior stocks, and that's in the report as well, and you can take a look at it. But so we've seen these nice insider signals that the insiders have come in and bought the gold market weakness, and you've seen the juniors outperform, and the fundamental backdrop for gold is improving when you look at what's happening in U.S. Money supply data. Basically, we've seen a breakout in the money supply. Now, you hear the Fed, remarkably talking about the economy in the U.S. They're going to let it run a little hot, and that growth is, Dudley came out Friday with the most astonishing comment, saying that he saw that growth was above trend, and what planet is this guy on? I mean, basically, we've got the U.S. economy where we've got an industrial production recession. It's been negative now for over a year, month over month. We've got a profits recession. So the only thing we've really got holding the American economy up, and there's a big part of it, is the service sector and the healthcare sector. But to say that the economy is running above trend is quite remarkable. Now, what is running above trend, Jim, is the money supply. So we've seen a breakout in year-over-year growth in M2. It's now above 7%, and this is really important because since Operation Twist, which was what Bernanke announced in 2011, where they decided they were going to basically sell short-term bonds and buy long-term bonds to flatten the yield curve, that put what we would say a floor on short-term rates. And since that time, we've seen a strong relationship between M2 growth and gold, the gold price. So now we've got central banks talking the opposite, where they're talking about doing kind of a reverse Operation Twist, where they're talking about, and this is, started in Japan, where they want to push up long-term rates and put a ceiling on short-term rates. So this is just the opposite of Operation Twist, okay? And so if you actually get the Fed coming out and doing something like that, and they're not doing it yet, but they're kind of musing about it, this should be another supporting development for the gold market. So there's a lot of negativity in gold right now, technical arguments, and you're going to hear a lot about, no one should buy gold because long-term rates are heading up, although the fact of the matter is they're still below where they were at the beginning of the year. I would look at a little deeper than that. I would look at what's going on with short-term real rates, and if you've got inflation expectations rising, and you've got short-term rates basically staying where they are, yes, maybe the Fed will get in another hike in December, but with the industrial production numbers sputtering, with the energy sector kind of on an edge here about whether this OPEC production initiative is going to work, it's going to be very hard for them to get any sort of aggressive interest rate hiking momentum policy in place. So if the money supply continues to move on the upside and seems to have the momentum behind it, then that should be gold positive. So you can read more about that at CanadianInsider.com this month for free. And it also has the top 20 gold stocks based off of our InkEdge outlook on valuations, insider commitment, and price momentum. So it's a pretty good deal for your listeners because they don't have to pay for it.
Well, also the demand for gold, I'm sure, is strong because China and India haven't stopped buying gold, have they?
And we're right in the middle of the Indian gold buying season, and the rupee has stayed stable, if not a little stronger against U.S. dollar. And when you see a stable rupee, that helps with gold demand out of India. So that's another fundamental factor that should be supportive of the gold price. It's not all about the Fed, and it's not all about what Janet Yellen and Bill Dudley say. There is more. There is, I should point out, there's a lot more to the world than just the pronouncements coming out from the East Coast of the United States from these central bankers.
Do you think if Hillary Clinton is elected that she'll be more protectionist than the current U.S. government?
Well, we talk a little bit about the implications for gold and the U.S. Election in our market report this week. And basically, we don't see any real negative downsides for gold based off the U.S. Election results. So, sort of the best case for the gold bears would be, I think, a Republican sweep, which is probably the most unlikely outcome at this point, because you could then get a chance of real reforms and as much as Donald Trump talks protectionist, no one really can put a lot of confidence on what his position will really end up being. So there's always a chance that once he gets into office, if he were to get into office, and that's a long shot right now, that his trade bravado would be more bark than bite. Now, if the base case happens and Hillary wins, well, those banking on a U.S. economic revival better hope that the Democrats don't sweep the Congress, because if they do, the Sanders factions will be quite strong in pushing Hillary to make good on her promises to basically balk on the TPP and take a harder line on trade. So, the best outcome, realistic outcome, I think, for the U.S. Economy and for trade is some sort of a gridlock, but that still doesn't, look good for the TPP, the Trans-Pacific Partnership. And if the U.S. doesn't sign on, the deal could be dead. Now, ironically, there was a study done, I believe it was by the C.D. Howe Institute, and I apologize if I have the author wrong, but more or less indicated that Canada would actually be better off in the TPP without the Americans. So, depending on how everything plays out here, you could have a mini TPP without the U.S., and Canada could be better off because basically it comes down to the auto sector. That if you took out the U.S. From the auto sector equation, then the developments for that sector wouldn't be as stressful on the sector. So we'll have to see how it plays out. But certainly there are some headwinds for global trade. It's going to be a real drag on the U.S. economy. It's going to be a drag on the dollar euphoria we keep hearing in the markets right now. And but it could also negatively impact Canada depending on how it plays out with the U.S. I mean, we're already seeing some potential issues again with softwood lumber. We've seen that movie before. So, but Canada, we've got a couple things going for us, and so I think that as we move through the stimulus package that the Trudeau government's doing, as we continue to focus on broader trade agreements with Europe and hopefully with Asia. Canada, I think, will surprise people on the upside. Not a lot. We're not talking about huge surprises. We're talking about marginal improvements. But in today's economy, every basis point of growth counts because there's just so little of it around the world.
We'll have more with Ted Dixon right after the break.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Ted Dixon. Ted, Canadian manufacturing did better in August than expected. We had a 0.9% increase, and if you take the auto sector out, it was 1.3%, mostly food manufacturing. Was that a surprise?
Well, I think you have to smooth out these numbers as they come in. But, I think that Canada's taken its lumps, for the past year or so, and now we're seeing a bounce back. And by the way, these manufacturing statistics, I mean, the headline, provides a sort of vision of auto plants and assembly lines, but it's much broader than that. And the rebound was actually in those awful industries that environmentalists hate. Petroleum and coal, were part of the big drivers behind this. And you've seen a big rebound in coal shipments. I mean, Jimmy Pattison astounded a lot of people earlier this year buying West Shore Terminals, which is the big coal export terminal here on the West Coast, and nobody could understand why. His timing couldn't have been better because we've seen a huge upswing in the price of coal and the sentiment towards the coal industry, as China has been shutting down a lot of its inefficient coal plants, and that's boosted their demand for coal imports. So it's some of Canada's resource industries that are helping the manufacturing sector. So, this is a welcome development and probably a little bit overdue, but let's not get carried away with this whole Bank of Canada spin that we need a lower loonie to drive manufacturing sales. This is just total nonsense, because these developments with the commodity markets have very little to do with the price of our currency. We're price takers in these commodities. What we need in Canada is a smart labor force, a labor force that's incentivized to be productive, to be innovative, and this has nothing to do with the low dollar. It has nothing to do with Stephen Polo's. And if I hear, this mantra one more time that we need a lower dollar to boost our manufacturing sector from where it is now, I'm just going to have to go and, I don't know, Jim, I'll have to write another blog about it or something and do a couple more charts, because it's just so annoying, that we have a central banker who's basically decided that he can fix or he can improve the fortunes of our export industry by making all of us poorer through a lower currency. It doesn't work that way anymore. That might have been the way it worked in the 1970s and parts of the 1980s. It might be the way it works for lesser developed countries, but for a sophisticated economy like Canada, where we're banking on people to be innovative, whether it's how we produce cars or how we get oil out of the ground. It's all about brains. It's not about brawn, and it's not about, a low Canadian dollar. That's for sure.
Yeah, the old hewers of wood, haulers of water. We don't need that. Of course, that's part of Canada's thing. Yes, we have lots of natural resources, but in a modern world, it's not about steel and concrete so much anymore, is it?
Well, these are always the basic foundations of an economy, but so is knowledge now. So so the basic foundations have broadened out, and technology is a big deal in the resource industry. So it's not just a question of the price of oil; it's a question of how much does it cost you to get the oil out of the ground, and that is a technologically driven factor. And to do that, you need smart people who have an incentive to think of things that can get, oil out of the ground and gas out of the ground more efficiently than competitors in the United States. And you don't do that by taxing them high. You don't do that by increasing personal income tax rates. And you don't do that by driving the cost of housing up by lowering the Canadian dollar. These are all bad policy errors that are being made by the Bank of Canada, the government of Alberta, the government of Canada in terms of raising rates at the high end. These are all big mistakes. Now, in terms of Ottawa, I give them credit for lowering the middle brackets, and in fact, on balance, it's a net tax cut, so that's good. But they would have been better, in my view, to just leave the higher rate as it was and go into a larger deficit to spur on lower tax rates across the board, and use that as part of their stimulus spending. But in any event, it is what it is, and hopefully over time we will see those over time we should really see personal income tax rates go to zero, because why would you tax something that you want to encourage? You want to encourage people to go to work. You want to encourage people to innovate. You don't do that by taxing them to go to work every day.
What's a better stimulus plan, mega projects or putting more cash in the hands of the average Canadian?
Well, in terms of mega projects, the question is who decides what they are and what happens if they go wrong. It would be much better just to work to getting the personal tax rate down to zero. And for all the progressive listeners on this call, you could deal with the flatness of that tax rate by still providing credits to low-income Canadians. So you can still have a progressive element to your tax system, but it does mean increasing consumption taxes, and that's a third rail for a lot of politicians. But look, at some point, we're going to have to do some reform to the tax system. We should start talking about it now and thinking about it now, because we don't want to be behind the eight ball. Canada is still in a pretty good position fiscally, and we could have these discussions now. Why let some other country that basically is forced to, by crisis, leapfrog us? Why don't we get ahead of the game? Let's invest in our people, and you invest in your people, first of all, by not taxing them to go to work. Why should you? Well, it's hard enough to get up and go to work on a Monday morning without the government taxing you along the way.
Well, Canada's Tax Freedom Day keeps getting pushed back further and further.
Well, I think what you have to look at in terms of taxes is the overall benefit that you're including in that. And if you're including health care, I think, that kind of distorts those figures a little bit. And, so you can't really compare that to other countries such as the United States, where you have to pay for your health care. So, I think let's just focus on those taxes that discourage people to go to work and discourage innovation. And the biggest one is income tax. Like, forget all these boutique tax credits that the Harper conservatives love. Forget all these handouts to these scientific credits that bureaucrats love. Just let people go to work, do what they do best, and you do that by not discouraging them, because those who've already made some money and who are on the edge of whether, well, do I go to work or do I retire? You want to have these people who've been successful. You want them to stay in the labor force as long as you can, and to do that, one of the ways is to not tax them for going to work. So hopefully that discussion will happen. Maxime Bernier, who's running for the Conservative leadership, is moving in that direction. He's probably the most economically reform-oriented politician this country has seen ever, at least in my lifetime. So we'll see how far he gets in that field. And but certainly he is the one who is most likely to challenge the current status quo that's evolved over multiple governments, both conservative and liberal, and it's really time for a shake-up of the tax system. But it has to be presented in a way that Canadians see it as an opportunity and not as a threat to their especially to the special interests out there. And there are many now who are well funded who don't want anything to change because they have quite a comfortable lifestyle as it is.
Any particular sector you think's getting a free ride? Maybe the movie business?
Well, I don't know about, a free ride, per se, but certainly a leg up on everyone else. And, I think there's a lot. You have to look across the board. And, the film industry is a provincial, race to the bottom. And the feds mercifully haven't directly got involved with that. But if you're looking federally, I think you have to look at everything. You have to look at these, flow-through shares, which, I don't know anyone in the mining industry who really likes these. I mean, they take them, and yes, it helps some juniors raise a few more bucks. The people who really like them are asset managers who build funds around them. But you could get rid of the flow-through tax credit, and no one you could do it, and you'd be surprised at how accepting the mining industry is, provided, of course, you get rid of all the other corporate welfare at the same time. Like, you can't just pick on the mining industry and leave these other tax breaks for other industries as well. You have to level the playing field. So, I think there's lots of little and in some cases big handouts that have materialized, again, under both liberals and conservatives. Both parties, have contributed to our current tax system the way it is. And, we're seeing the liberals take a look at the housing sector, for example, which has been a huge beneficiary of backdoor tax incentives via CMHC. And in some areas, in some respects, the capital gains exception for primary residences, which has likely been abused by some speculators. So we're seeing that close up a bit. That's a positive development as well. I know there's a lot of concern about these measures, but I think that was part of the effort. Is to provide a little bit more risk in the marketplace, get people thinking a little bit more about whether they should be taking on huge mortgages, and also whether prices will keep going up forever, because anyone of your listeners who invest in the stock market knows that there's a real risk that whatever stock they buy is going to go down. Well, I'm not so sure that feeling is prevalent in the housing markets in most cities in Canada. Certainly in Alberta, they've come to that realization pretty quick, if that wasn't the case already. But I'm not sure in some of the major markets in southern Ontario and in Vancouver, where the concept of a prolonged bear market in real estate is something that a lot of home buyers and speculators have ever thought about.
Ted, thank you so much for chatting with us.
It's great to be back.
My guest has been Ted Dixon, CEO and co-founder of IncResearch.ca, his website, CanadianInsider.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Our YouTube channel is Talk Digital Network. Questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.